Well, interestingly, we saw the stock market rise 300 points on the news that a quote source confirmed information from the trade deal, and now that has been officially denied to be truthful. Don't worry, the market will forget all about that by Monday's trading session. You came here for the truth, so let me unveil that for you. Previously, I had done a video which perhaps you had seen, and this got into the fact that the stock market is rising higher on an unconfirmed report. The market doesn't care. The market is trading based on these algorithms, and they boost up the prices of these stocks on any information, real or fake. So I got into the fact that, look, it might be real, but you can't actually trade on information that's not confirmed. That right there is very dangerous. Of course, they do so all the time, but I had to bring it to you. This is just one example of the type of information that is brought to the public. Perhaps they don't care. However, I still need to do my best in order to bring it to you. This was the video which you may have seen. China economy will suffer without huge win in the US trade deal. If you look at this at the time of the recording, it only had maybe 13,000 views because nobody really cares. In there, I got into these two articles out of CNBC, and they had some interesting stuff to say right at the beginning. The major averages jumped to their highs of the day after sources, very interesting word, told CNBC that China had offered a 6-year increase in US imports during recent trade talks. That's funny because that source is nowhere to be seen. Now, obviously, this has to go under the radar. They can't give out their name, but that's fine. That's good information to know. But to actually be trading on that info is totally out of this world. If they had said some individual who they named and he gave vague descriptions of what's happening, you know, we're making good progress on this factor or that factor, and we have done this or that, but not necessarily giving specifics. This is a very specific detail talking about a 6-year increase on US imports. Now, that information may or may not be true, but to trade on it is absolutely ludicrous as far as I'm concerned. Looking further into this, another article, basically the same information. China has offered a 6-year boost in imports during its ongoing talks with the US officials familiar with the matter. Who exactly are those that are familiar with the matter? In that previous video, I talked about the fact that perhaps it was somebody mopping the floor and they were listening in, eavesdropping. And is that who it is? Who could be the source of this data? Is it a real person, or is this like the BuzzFeed information that was just provided? We don't know that. And the point is that, you got to collect all the data, whether you know it's real or fake or anything. You try to get as much as you can, and then you piece the puzzle together. But having this type of information doesn't really do you any good if you're trying to make a trade on it, unless you are a computer algorithm and you can't discern what is real or fake. Then we had this out of Reuters. Things are going very well with China and with trade, he told the reporters at the White House, adding that he had seen some false reports indicating that US tariffs on Chinese products would be lifted. If we make a deal, certainly we would not have sanctions, and if we don't make a deal, we will. We've really had a very extraordinary number of meetings, and a deal could very well happen with China. It's going well. I would say about as well as it could possibly go. Okay, that's just political speak there, but he makes some interesting points, and that being that these were false reports. There is no indication of anything happening with the trade tariffs. That might happen, but right now you can't say that. The trade deal's not over, yet the stock market rose 300 points. On Monday's trading session, do you think this comment false reports will have anything to do with it? Of course not. By then, the market forgets about it. But that's the way this works. It's criminal how they act. In the second paragraph, according to sources briefed on the ongoing negotiations cited exclusively by Reuters on Friday, the United States is pushing for regular reviews of China's progress on pledged trade reforms as a condition for a trade deal, and could again resort to tariffs if it deems Beijing has violated the agreement. We'll see if they can actually slip that in there. That's pretty interesting. I'm not sure how they're going to go about being accountable for this type of info, but we'll see. see. I want to know what exactly goes into this trade deal. They certainly could have a trade deal. I actually expect one to go through. Whether it's meaningful or not, that's the difference, because they're going to have to come out and make both sides happy. That's difficult. And also they have to make the stock markets and the economy in general happy. So it's going to be difficult for them to come out with something major and still keep both sides happy, as well as having this to actually benefit both sides, as a result. The threat of tariffs is not going away even if there is a trade deal, according to one of the sources. We'll see what they do with this. I don't know specifically. The reason I'm mentioning this, all I'm trying to say is that the information that's provided to us means nothing until it is official. If you want to trade on data, you have to know what's coming to you. A guy like Warren Buffett didn't trade on this type of information. He's looking at the books. He's looking at the numbers. He is getting into the data, the actual details. He's not seeing this as a reason to buy. Okay, he wants to know what happens as a result. Are we getting a good trade deal? Good, that's going to be a bonus. But he's not suggesting that now, today is the time to buy because of this little piece of information that was found out to not be true, of course, but here we are. This is the type of thing that's really messed up today, is all about buying the dip, the fear of missing out on all of this garbage that we're seeing. Unfortunately, none of it really matters anymore anyway, because nobody gives a damn. So that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have everything that you need. You can flip through them at the link in the description. I get into the foundation, history, asset classes, making money, tax incentives, so much more. Check them out, the link. If you want the audiobook version, you can get that at themoneygps.com. So let's chat for a moment. I want to talk about a few issues here. Number one, what we're looking at today is an economy that is completely reliant on quantitative easing. We know that specifically because as soon as the quantitative tightening took hold, the stock market went down. That is official. That is confirmed. I think a lot of people who are bullish on the stock market today, they know this information. They just believe that it's not going to be allowed. Even though they have already engaged in this quantitative tightening overall, they somehow ignore that reality. Okay, fine. So we look further into this and we can see that this has not been the first time that a central bank has engaged in quantitative tightening. There have been more cycles. I assure you, I know it's hard to believe, but there's these history books, okay? And you can flip through the books. It might be difficult for a lot of people to open the books, but if you want to know the truth, you can find it there. It's a book. So you flip through it and you look at what the Federal Reserve, for example, has done. You can even see what the ECB has done over the last 2 decades, in fact. So you look through them and you find that, oh, in fact, they do increase interest rates. And then it gets to a point where they flatline for a little while. And then the recession, by the way, is already on at that point. Then they react too late and too slow, and they start to bring interest rates down. The important point here is that we have historical information to be able to confirm this data. We know that the central banks have done QT before, not to this level, but they've done it. They've already come out, Powell said this, that we're going to bring our balance sheet down. We don't know how far it's going to go down, but it's not going to go as far down as it was before the crisis. So we know that it's going to remain above 1 trillion. I think it's going to be a lot higher than that, but here is where we are at today. How long they could push this out for? You're looking at the wrong guy. That's for the financial experts. They seem to know everything. There are gurus. Check the comment section below. There's people who seem to know absolutely everything. So you can look on here and you can get their information. They have a very, very specific analysis of exactly what the Dow Jones is going to be at in what month and what day and all that silliness. But what I look at today when I see some of the others out there, they're outputting reports that quite frankly are not real. I'm not going to get into any specifics. However, I've seen a bunch of stuff and a lot of people are very interested in it. If you look at the views that my videos get, almost in all cases, they're very small. And I look around to see a bunch of other things out there. It's not data, it's not information, it's not facts. It's just silly reports about things that, as far as I'm concerned, it doesn't even exist. But it does does great to get some hits out there. And I'm talking about in this space. I'm not even talking about little kitten videos or anything. I'm talking about in this space. And unfortunately, people don't really care about information. That's the sad part. That's something I loved. I love looking into the data. It's always something that I have constantly sort of been addicted to just look at the charts, to look at the data, to look at the information, to see all the geopolitical events happening, to see everything really unfolding. And that's something that I like to do. A lot of people don't. They're just, how can I make money off of this? I need to make money. They have no exit strategy whatsoever, but they just think in their head, I need to make money. Well, this is probably not the best thing. If you want to make money, you shouldn't be in stocks. You should be in business, because of course you have control. In the stock market, you don't have control. You give up your control when you give your money to your brokerage or whatever you're using. But this is not understood by most people because they don't understand how to build anything. They simply want to put their money in. They want it to go up. They're not willing for it to go down. And it's really obvious in the last few months what we saw. It's funny, in October you saw a lot of people that were really starting to deny the fact that this stock market could go down. Then November, it was a lot of silence. December, they were aggressive. They were becoming very, very aggressive. And it's obvious because they started to experience wetness in the underpants area. And unfortunately for them, they didn't have to feel the burn right away. Okay, that took a little while, but they didn't get wise. They didn't get smart. And they will unfortunately suffer the consequences as a result. Now, that was the Rant GPS. Thank you for listening and staying until the end. Take care.